stocks buzzing around, and let's start off the show with one particular company from the pharmaceutical space. It was in fact a steady quarter for RPG Life Sciences as the company reported a 13% revenue growth, with margins also improving despite ongoing geopolitical challenges impacting the supply chain. The domestic formulation in fact is the biggest contributor to sales, with around 55% of sales coming in from the Indian market. To discuss more on their Q3 performance, we have Mr. Yugal Sikri, who is the Managing Director at RPG Life Sciences, now joining in. Mr. Sikri, hi, thank you very much for taking the time out. Well, I just wanted to touch upon the domestic business because that is around 55% of your sales. Can you tell us how exactly did you all perform in this quarter? What was the breakup in terms of volume, value growth, and the growth from new brands as well as your legacy brands? And what are you envisaging in terms of India growth for the company?
Thank you so much for taking me on the call on your channel. Yes, you talked about the Q3 performance, which has been pretty good. On the domestic formulation side, where your specific question was, we continue to grow faster than the market. This is the trend which you're maintaining for the last 4 years, and we expect that growth to continue. And that's our prognosis for the domestic formulation business. In terms of the growth drivers, which you talk about, price, volume, and new products, the price growth has been to the tune of around 4.5–5%. Volume growth is the one which is significantly high, which is healthy, high-level single-digit growth, and the new products continue to grow at 2.5–3%, contribute 2.5–3% toward the growth. So all the key drivers of the growth have been performing well.
Okay, so in terms of volume growth, I think on an average you've done about 12–13%. Is this something that you can sustain in the last quarter of the fiscal and also in FY24?
Yeah, our going by the trajectory we have had so far, so I can say that we'll continue to grow double digit. We will continue to grow faster than the market, and more importantly, on margins as well, our growth trajectory continues. We have every year we have been recording higher margins than the earlier, and today I'm happy to share with you that we have achieved benchmark margins in the competitor companies.
You've preempted my next question, Mr. Sikri, and we've been having this conversation over the last many quarters where your margins have consistently improved. FY19, they were 10%. Then, now as we speak, they're 22%. The question is if this is sustainable and if it is likely to grow further from here. What's your target? And secondly, you've been talking about new products as well. The contribution of that the last time was close to around 19–20% of your overall sales. Where do you see that number going, given that you've launched about 8 extensions in the first half of this year?
Yeah, specifically first on your question on margins, as I've been explaining every time, our margin expansion trajectory is more structural. And what do we mean by structural? That is driven by the headcount optimization or span of control optimization. We have done some formulation re-engineering where we have challenged the formulation of the existing products, efficiencies enhancement. We've also prevented P&L leakages from the system and efficiency. And I think all 4 factors are structural. So I expect that margins should continue to be at that level. Going forward, whether the margins will improve, it largely depends upon how the situation on the input cost pans out, APIs, solvents, packaging material, all of that put together. So that's what I feel with respect to the margin. Coming to the new products, yes, the new products, we are focusing on both the segments, mass business as a specialty business. Our drive on new product launches continues. We have launched monoclonal antibodies, 5 now. Last quarter, we have launched yet another product called denosumab in 3 therapies, which has a good traction. We have a life cycle management strategy continues in terms of new line extension launches. We launched Neprosin Plus, which is taking our product close to about 50 crore plus this year. And that strategy continued along with our customer segment expansion.
Okay. Mr. Sikri, I'm sure you've noticed that in the domestic market, one of the strategies which has been deployed by a lot of the pharmaceutical companies is M&A. either you're buying a portfolio of drugs, either you're buying out the entire domestic business of a company to grow the domestic market. You have in the past indicated, and I think it's one of the priorities as well, that maybe acquisition could be something that y'all would look at. Are y'all looking at acquisitions in the domestic market actively? What might the cash on books be? And is that something that we could probably expect in terms of growth?
Yes, I think you rightly remember. The inorganic has been one of our consideration in our active consideration. And to be very frank, I think we have been actively looking at acquisition, whether it's a brand acquisition or company acquisition, but we don't want to compromise on profitable growth. The trajectory which we have set. So, and we also created a very specific agenda in terms of product portfolio, in terms of gross margin, in terms of the therapy gap which exists. So all of that considerations are driving our M&A thought. We have been evaluating actively, and let's see when the right candidate comes and we move on with the inorganic route as well.
Okay, Mr. Sikri, just a quick last question, and the reason I'm bringing this up is because of the kind of stock reaction we are seeing on Cipla today. The US FDA has issued 8 observations to one of their facilities. We don't know what the nature of the observations are. What is the status of the warning letter that y'all were issued by the US drug regulator all the way back in 2013? The US, are you looking at it actively as a market, or are you going to probably just be a distributor or marketer of drugs there?
I think your question brings to me another point which I thought I must highlight. International business is also our second priority after the domestic formulation business. And we have, you talked about the US warning letter. I'm happy to share with you that both our plant, formulation plant as well as API plant, the US issue was with respect to the API plant as well as the formulation plant. Formulation plant, we have cleared everything. In the API plant, we are addressing the specific issue of the plant upgradation to match the standards. We are investing heavily on capex. That exercise is going on. Similarly, we have spent heavy capex on the formulation plant, which will gear us for the international business. The US, frankly, would be our last priority. We are maximizing on the Europe, Australia, Canada, and the Asia markets. And that's where our growth is being expected. We're also working on the new product development. We have a stream of new products which currently our R&D is working on. When the 2 plants get ready, then we have the new product pipeline also supporting the international business.
Okay, so we'll leave it at that. Just one final question. You said you're actively focused on inorganic growth. So you do have cash on your books. Can any of that be deployed for acquisitions in this calendar year itself? Have you shortlisted anything?
Yeah, I think it all depends on the opportunity. And yes, the cash generation is to support our future growth. Some of the cash is being deployed for plant upgradation, and also we have the cash for the inorganic opportunity.
All right, we'll leave it at that. Thanks a lot for joining in, and all the best. Well, that's RPG Life Sciences saying that they've achieved their benchmark margins, their volumes will continue to be in double digits, and they're actively looking for some kind of inorganic growth as well. Let's slip into a short break. Lots of stocks in focus. Samvardhan Motherson, Cipla reacting to all the news flow. We'll get you an update on all of that in a bit.